Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, March 19th. The year's 2019. Let's talk trading. How to trade like a pro, profiting from a loss. What's the difference between a pro and someone who's not a pro, an amateur, a rookie, a newbie? Pros know how to profit from losses. Now, I'm not talking about money. I'm talking about experience. When a pro has a loss, they analyze the trade. After the trading session, they go back and they analyze the winners and they analyze the losers. Think of it as a debriefing, an after action report. And what they do is they look at what went into the trade. They see if they made a mistake. Did they do something that they shouldn't have done? Did they forget to do something that they should have done? And so by doing this, time after time, they learn how to become better traders. So that's how you profit from a loss. But there is one little thing that you need to know. You can do everything right. You can analyze your charts, set your TP, set your stop loss. Your entry timing can be right on the money. Your position sizing is perfect for where you placed your stop, within your money and risk management, and you can lose. And when that happens, the trader says, oh, well, on to the next trade. My execution was flawless. My timing was where it was supposed to be. I didn't rush the trade. I didn't chase it. I was right there, spot on. But it resulted in a loss. Oh well, keep trading. Because see, what happens is, if most of your trades, if your execution's spot on, and your method is solid, then over time, it should produce results. Unless something happens in the market and the statistics change. I mean, if you run some stats and over the last 100 trades, 80 of them were winners, and you have a positive, and it produced a profit, then the next 100 trades should be somewhere in the ballpark. Maybe it's 70, maybe it's 85 winners. You don't know. But if your analysis says, yeah, out of the last 100 times, 80 were winners, and then you get up there and then you start trading, and out of the next 100, only 40s are winners, then something really changed, or for some strange reason, your analysis wasn't right. And, maybe this is a bad example because 100 trades isn't really enough. It should be more like 1,000 or 5,000 to see. But anyway, hopefully something I just said might ring true with you, and it helps you improve your trading so you too can trade like a pro. So let's go in here and start looking at things. Looking at our charts. So we know once again that every trade, our money and risk management will be spot on. Okay, we can see prices in the upper weekly wick zone here, but we can also see all the gaps filled. So it is Tuesday. I alerted you Sunday night there were still gaps to fill. I alerted you Monday morning there were still gaps to fill. If you didn't take those trades, you can't say I didn't give you a heads up, right? And the euro yen right now, we've got, let's see, about 8 green daily bars in a row. You can see this one struggling to make a new high. And you can see here it's still struggling to close. We had one hourly close above the low of the first day of the month. You can see here we're still below the open, so the month is still red. And here you can see we're outside of the range of that first day of the month. We dipped into that inside bar once again and came out. So if you've been trading the inside bar breakout, once again, it paid off. And hopefully you guys will see a pattern here, traders that watch my videos, that same pair every day, same charts every day, pretty much. Every now and then I might show something new just to help you fine-tune what you're doing. But you can see that these methods, if you follow them, for the most part, you too can be profitable. Okay, we just had a highest open put in last hour. Price tried to rise up, failed to make a new high. So if you took that holo trade, it paid off. And here we have the buy zone. Once again, pivot within the buy zone, so no strong bias. So the short trade triggered for a profit. We had another short trade trigger there. That was a scratch. As you can see, it didn't break through here, so it just scratched a trade. You had another short trade trigger here, but that bar was already 10 pips long in range, and we know what the average, or the from frequency distribution, we know if it's already gone 10 and like that, chances are you might as well wait for the next hour, because it, the frequency distribution's telling you no, it's not going to. If that's all it is, that's all it is. It's telling you there's low chance that it's going to keep going. It could, but it didn't. On the other hand, you see here, if you took that same strategy, by the time price got to that point, it already exhausted most of the range. But you see here, the next time around, that was only about 5 pips. You can get 10 pips or more. There's a good chance. I'll show you that frequency distribution, or maybe if I can find it, I'll do it right now while we're discussing it, so you can see exactly what I'm talking about. I really wish it would give you the ability to label these at the bottom so you know where to go. Let's see, that's just the range for the week. We only added 8 pips. Let's see, where's the range? High to close. Did I get rid of the range frequency distribution? High to open. No, there's the range. Okay, we can switch over to H1. And you can see here, from 0 to 9, over the last 100 bars, happened 33% of the time. But if you want, let's crank this up all the way so you can really get, and this is a 2014 indicator, and the range gauge is a 2013, just to let you know. See some of the old stuff. You don't have to have my latest code to run these. Okay. So when you run it here, 0 to 9, 19% of the time over the last 5,000 bars. Between 10 and 19, 46% of the time. So the bulk is going to be here. That's the bulk. You can see you've got about 80 times out of the last 100, you had a range 10 or higher about 80% of the time. But this is the number. If we went in here and we changed this, and we, maybe we looked at it from 10 to 15 and then 16 to 20, you might see there might be a difference. So you might want to get in here and change that. But for our purposes, I'm saying, yeah, it's got a good chance it's going higher, but I'm not willing to take that chance, not when I'm looking at price action. So you can see right here, it moved up. And what was the range on this candle? Let's see, can we see it quickly here? We had, that was 15 pip range. So it was still within here. So it's within this range. And so if you add these two numbers, that's 65. So you only got 1 out of 3 chance of it getting higher. Got here, say about 1 out of 3 chance. So I'm saying I'm not going to take that trade. You let it, you see what happens. Came back, gave you the second opportunity, and that one would have paid off. That's how you can avoid drawdown and all those other things that you, as a trader, you want to avoid. Rat zones in effect. Larry live trade short here at 26.41. Once again, we took out the pivot. We're still seeing the monthly pivot here that we took out earlier, but the weekly pivot, not yet. And here we go, daily. You see here, we took that pivot out. Was it yesterday or day before? So we still have 2 open pivots for the month of March. Daily pivots, that is. Price action. Once again, price closed within the 10-20 range, and then it left it. Price closed within the 10-20-30 range. You can see here, slight move to the upside. It's tried to break out here. 3 ball at the bottom, so your bias is long. So 2 ball at the top, 2 ball, short bias. So you look to go short at the first line you encounter. Wick zone, another big wick zone here, but we still have the in and out. Okay. Previous daily, weekly, monthly, open, high, low lines, just trading with candle color at the line. You can see here we've had about 4 pip movement to the downside. Here's a nice Einstein line right there, short at 47, paying off. And we've already gone over the frequency distributions. And once again, looking at the range, looking at the ATRs. And looking at the high to close frequency distributions. So this is basically showing what's going on with the rat. And you can see, this is why it's 20 or more right there. Let's see, 24. So that's what, 76% of the time it left the upper rat zone. Here we got 32. So that would be 68% of the time it left the upper rat zone. The lower, the green rat zone or lower rat zone, red rat zone, green rat zone. So once again, those trades can be profitable. So, fellow traders, it's not what you trade, it's how you trade it. So get out there and drain the banks like a pro.